All right, guys, what's good? It's part 4. Jay Wayne in the house with me again. We got a big one coming. We're getting deep on this question. About to take it to the next level and close out our series with some fire. What's good, bro?
Hey, look, volatility is the name of the game. I mean, without it, money ain't flowing.
That's it.
We got to talk about it.
Just talk about it.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trade and get paid, trade and get paid, trade and get paid, trade and get paid, trade and get paid. Oh yeah, trade and get paid, trade and get paid.
All right, so the next question we're going to answer actually is 2 people that kind of ask similar questions. And at first, it doesn't seem like they're similar, but when we get done, trust me, you're going to see the similarity in the question. So Cash J, shout out to you, longtime subscriber, been on the channel for years now. Appreciate you asking, how important is liquidity for potential trades? Great question. Yeah. Now, I want to kind of bring that in together, and you're not going to see the tie, but watch this. Mayor Sanawani, I hope I said that right. Shout out to you. You've also a longtime subscriber. Got the heart next to the name, meaning that I've put hearts on their comments more than a lot of people. So shout out to you. I love trading GA. He said, bro, I love trading GA, and I only watch one pair. You guys know that's what I trade, GA. So shout out to you for following my channel and following that path. Also, I only look for 15 to 20 pips a day. You sound like Jay Wayne. So my question is it okay to follow only one pair, or should I add one more backup like GU or GJ? So we're going to answer both of those questions kind of together, because liquidity and then looking at different pairs really brings together with currency correlation, right? So really what happens here is currency correlation helps us understand how liquidity and why you should pick another pair to be your backup, right? So first things first, you trade a couple of different pairs. I pretty much stick to GA. I'm a little bit more of a swing trader, but of course people know in the last year or so since COVID, I don't trust the markets as much, so I've been scalping. Yeah. But GA is my pair. GA's paid the bills for a long time. And you know, I've kind of had some backup pairs that have kind of been, at times it's been gold, at times it's been EG, and you know, I've kind of switched that around a little bit. Okay. And for me, that has been switched around a little bit based on where movement was happening and where correlation with GA occurred. You know, so because I know people ask me all the time, why do I trade GA? Well, for me, I've always had a strong interest in commodity trading. And Aussie dollar is a commodity currency linked and correlated closely with gold and with Asian currencies. And so for me, it's interesting because when you see GA move, and then you look at Aussie dollar, US dollar, they generally move opposite, right? And so gold and Aussie move together. Well, here's the thing about that. GBP has the most speed and volatility of all your major of all your large currency that we trade, right? Yeah. So for me, that's a perfect marriage because I like the consistency and the continuity of commodity-based currencies, but I like the speed of GBP. So I could get in and out, which is I used to scalp exclusively, and I could get in and out with GBP AUD and find consistent, easy moves. So that's why I like GA. Well, when gold is abnormal, I don't like using that for a confirmation pair because now suddenly gold is way at a high where it really shouldn't be, or really it's overextended, and I know that this is not normal gold movement, and so it doesn't match with GA very well. So for me, I take that out off my table and I just take gold out of the equation, and I start to look at EG, or I might like to start looking at GJ, because it's other pairs that correlate well with GA, but that are moving in a more consistent manner. Does that make sense?
Oh yeah, absolutely.
Why don't you talk about that for a little bit?
Well, so I trade GA is one of my pairs, GBP, JPY, so pound yen and pound dollar. All right, GBP USD. Them usually my three. Like if you look at my trading journal, it's mostly GU, 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 GJ, GU, 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 GA, GU, GU.
Right.
So that's what it looks like. Now, with the volatility thing, I got a couple different things that's flowing through my head right now, but I would say I would go over for GU. I tend to go to the Dixie, the dollar index, and a little trick that I do. I don't know if it's a trick, but I know a lot of people don't do it. Is I would mark up the dollar index as if I'm trading it. Like I would do a full-on trading setup, and because if the dollar index is dropping, then most likely I know that GU is be going up.
Right.
All right. Now I don't know how at what speed because a couple things is in play. Yeah, you got so, but a lot of times it'd be the opposite. Enough to make money with, right? Enough to make money with. I don't know about 100 pip drop on dollar index, 100 pip going up on GU. I don't know about all that, but I know it's enough money to be made, enough movement. So I would mark up the dollar index as if I was going to trade it to kind of see what it's doing, and then have my pound dollar marked up. I'm really going to trade that. And that way, now in his last video, we talked about multiple time frame analysis. Yep. Well, now I use those other currency pairs for analysis as well, putting just the overall piece of the puzzle together.
Absolutely.
And also news, right? A lot of people don't like news when it comes up, especially if you're scalping and day trading. You're like, oh, it's another news day. Well, that's healthy because if it wasn't a lot of news going on, then maybe the market won't be moving as much. So allow the news to take place and let it push to a new high.
Absolutely.
Let that volatility come in the market. Let price get to those supply and demand zone areas. Yeah. Because we know what to do with those.
And that's where liquidity comes in. What Cash J was talking about is how does liquidity play, which that's exactly what Jay is talking about here. Imagine having the power of understanding where an index is. So you're looking at GU for an example. Imagine having the power of understanding where the Dixie is, right? And what the Dixie is doing. And if it's in a base, then we know what is it doing. It's gathering, right? And so now we take that and we look at that in the conjunction with GBP USD, let's say, and you see that GBP is strong, but the dollar is consolidating. Well, that means you're going to have slow, bullish movement. But when you look at it and let's say the dollar is gathering and now it takes off and now you understand this liquidity has been gathered by the US dollar, meaning that it's going to go up. Even if GBP is slightly going up, you're going to have sideways or slow downward movement on GBP USD. So liquidity plays a huge factor. Absolutely. And when you start to look at that with multiple pairs, GBP AUD, GBP USD, GBP JPY, and you see that GBP is consolidating for all three pairs and the other ones are in control, that gives you opportunities and different variations of how you can use the GBP to your strength.
I'll tell you another good one. If you're trading GU, look at the dollar index. If you're trading gold, look at Swiss franc. Yeah, that is a good one to kind of gauge on what's happening. What about the
Swissy?
Yeah. What about the the pound Aussie? What's pound, another?
Yeah. Gold? So gold, pound yen, and EG.
So look at those, and you can get a cross reference. Not that you're trying to trade all of those at once, but you can get like a comparison and see, oh, these are moving this way, so most likely mine will be moving that way.
Yeah. At the end of the day, liquidity comes down to bank movement, right? At the end of the day, the banks move money the way the banks move money. And they have certain price points that they're looking to move the market and use and make money. So I've said this 1,000 times in my classes. Again, if you are not a part of TTA, you need to join because we're talking deep about this stuff in our classes. But I go into a lot of like psychological levels, bank levels, and understanding what institutional movement and all that stuff. I teach a lot of that in my advanced class. But when you look at, for an example, where if price is on GA, if price is at 1.8456, now we look at a penny as a penny. But let's say, for an example, if you're looking at a daily chart, price is at 1.8456, and you see it's consolidating and it's at the top of a range. Now you start to see where it looks like it's going to break out, but it starts to come and drop back down. So now we're at 1.8421. So you say to yourself, that's only like a half a penny. That's only like it's not that big. For us, that, it's not that much movement. And so for me and you, if you look at and you find if you find a penny on the floor, you probably just pass it by, right? You're not even thinking about that.
Right.
But when a market has $6.6 trillion moving through it, and about 20% of that is coming from GBP. So now you're talking about somewhere in the neighborhood of $1.6, $1.8 trillion a day. Now, if you had a penny for every one of those dollars, that's 1.8 trillion pennies. So now we're not talking about a penny anymore. We're talking about millions of dollars. And so for us, we have to understand that if price is moving at a certain level, liquidity is very important, because that gives us price points where the bank is going to manipulate the market down, even if it is just a half a penny, because they know if we've got 100 pips, as we would call them, coming, then that little small move, 100 pips, that is a massive move to us, is millions of dollars for the bank. Millions and millions and millions of dollars for the bank. So yeah, when the bank makes that millions of dollars like that by simply spreading the market out by a half a penny, or what we would call 50 pips. For us, that could only be like just a wick or just a small move on a smaller time frame. But for the banks, that's them gathering liquidity to push in a different direction, so that instead of selling or making money at 1.85, they'd rather buy it at 1.842, save that little bit of extra money on their purchase, so that they're making like that extra half a penny on each one of those dollars that they're making on that particular move in the market, because everything comes down to supply and demand. Liquidity and understanding multiple pairs and which ones you should trade is very important when it comes to the market.
Absolutely.
All right, guys. That's the conclusion of this Q&A series with Jay Wayne featuring Jay Take Profits. Go over there and hit that channel. Like, comment, subscribe on Jay's channel. But all of these questions have been fire. I know there was some we didn't get to. Some of the questions we didn't respond to on the videos.
Maybe next time.
But maybe next time. And check the community, because I try to stay on top of the questions. And I'm going to tell you another thing. If you really want more in-depth answers and really complete full hour classes like this on these very topics, you need to join Trend Trading Academy. Become a student. Go to trendtrading.academy. Go ahead and join the classroom, because I'm telling you, it's fire. We're going over a lot of the content that you guys are asking me about in full depth.
Absolutely. We don't miss it. It's not one of those places where you're ignored. You can't ask the question because it's just nobody calling on you or looking at the comments that's coming in. You can literally unmute yourself, raise your hand, and ask the question. We will answer you. We do care about you becoming a profitable trader.
Absolutely. We try to bring value to everybody here, and not only to TTA but to the YouTube fam. So I hope you really enjoyed this series. Don't forget to like, comment, and subscribe if this series brought you value. That's going to help us to push this out to more and more people who have questions just like you. For now, guys, I'll see you in the next video.